Everyone, welcome to today's webinar on understanding all about ITR filing, how to file the ITR. So, what are we going to take away from today's session? We are going to understand different due dates which are applicable for ITR filing. We will be understanding the importance of preparation of ITR file, like it is a kind of a folder, what documents we have to put in this ITR file, and why it is very important to maintain an ITR file. We are going to understand the different types of ITR forms which are applicable to an individual. We will understand, like if ITR 2 is more suitable to you compared to ITR 1 or ITR 4 is a suitable option. We will take this detailed view. Then we will understand the mistakes what you should be avoiding while filing your ITR, because there are certain mistakes what actually we incur while filing the ITR, and we are not aware about these errors or these mistakes, because until and unless we are aware, we will not be able to correct them timely. Then we will be seeing how we can file the ITR on Cleartax tool. So we have a Cleartax income tax filing tool which you can take the benefit of, and you can file your ITR without any hassle. Let us begin the session. So we'll be talking about the due dates applicable for filing of ITR. So there are various types of returns what we file. So as I think you already are aware about that the due date for filing of income tax return for individual is 31st of July. So what is this due date? This is the original returns due date. So whenever we are filing any return for the first time of a financial year, that return is called as the original return. So if we are not filing till 31st of July, then we have to file a belated return. So let us understand what is an original return. So whenever we are filing the ITR for the first time, and there is no correction yet which is done, so the first ITR is the original return. Now, what in case we see that we have made a mistake while filing the ITR? Okay, like after we have filed the ITR, or if our CA has filed the ITR, then we go and check the information. We see that certain income is not disclosed, or maybe certain deductions, certain exemptions which were eligible to claim, it is not disclosed. So what we can do, we can revise the ITR, but revision is only possible if at all we have filed the original return. So we can revise the return n number of times, but there is a due date to revise the return as well. So what is the due date to revise the return? It is 31st of December 2023. So we are talking about the assessment year which is currently going, assessment year 23-24. You can file the original return by 31st of July, and if you make any mistake, you can revise the return till 31st of December. Okay. Now, what in case we are not able to file the return till 31st of July? Do we have any options? Yes, you can file a belated return. So, what is a belated return? If we do not file the original return before the due date, then we can file the return after the due date. It is called as belated return. Now, is there a timeline to file the belated return? Yes, we have to file the belated return maximum by 31st of December, which is as same as the revised return. But please keep in mind that if you are not filing the return before the due date and you end up filing a belated return, you will end up paying a penalty. So what is this penalty? If your income is up to rupees 2.5 lakhs, there is no penalty. If your income is between 2.5 lakhs to 5 lakhs, means the slab of 2.5 lakh to 5 lakh of income, then you have to pay a penalty of rupees 1000. And if your income is more than rupees 5 lakhs, you have to pay a penalty of 5000. So this is a penalty, this is a flat penalty you have to pay. Over and above that, if you have any tax liability, then the interest will be applicable on you. So interest will keep on adding every month. So we should be filing the return before 31st of July whenever it is due for us. Okay, now what is a defective return? So why are we talking about all type of return? Because see, once we have filed the return, we may get a notice or an intimation from the department. So if you are filing original return or revised return, you get an intimation that this return has been processed. what information we had and what information you have provided. There is a comparison between the same. If there is no difference, it will be intimated and everything will be clear. If there is any difference, the department will ask you to either pay the tax or to correct the ITR. But what in case if you have filed the return, but you have not considered the income which is available with the department? The department will mark it as a defective return, and then it will be a notice. They will be giving you a notice that your return is marked defective. So what can we do if we have received a notice for defective return? You have to reply to that notice by filing a fresh ITR under that particular section. So you will get a notice under section 139.9, and then you have to file the ITR under that particular section as a response to the defective return. So if you do not do so, then the department will consider whatever you have filed, and accordingly they will process the return, and they will ask you to pay the tax liability, whatever is applicable. So now we have talked about defective return. Now, what in case we are not filing, we had not filed for the previous years, like for assessment year 2021 or assessment year 2022, whatever it is, we have not filed the same. Can we file it now? Because the timeline is already over. So yes, we can file an updated return where we either have not filed the original return or there is a change in the return. So what type of change it can be? Either you can increase the income, or you can decrease the expenditure or decrease the exemptions or deductions what you have claimed. In short, there is a tax liability which is going to be imposed on you. So only in such cases you can update the return. But updating the return will come with a penalty. So if you are updating it within 12 months, the penalty will be 25% of the tax. And if you are updating beyond 12 months but less than 24 months, it would be 50% of the tax. That is going to be the penalty which is going to be imposed on you. So, but yes, the option is available to file. People who are looking to go abroad, who wants to apply for visa, for them, the visa department asks you last 3 years ITR or last 2 years ITR. In that case, if you have not filed, you can file the updated return. So now we have discussed about original return, revised return, belated return, defective return, and updated return. Now we have understood about when to file the return. But is that the only thing what we have to do, or do we have to do additional step to make the return valid? So until and unless you have e-verified, so we have to do a verification for the return. We have uploaded, we have filed, but we have not submitted. So submission happens with verification. So you can do e-verification with your Aadhaar OTP or with your bank OTP or internet banking or with DMAT account. You can do the e-verification. But that is important because until and unless we e-verify the return will not be considered as filed. It will be invalid. So what is the timeline to e-verify? 30 days. Within 30 days, we have to e-verify the return. Otherwise, it will be treated as not filed. Okay, so say for example, if we are filing for this year, we have to file till 31st of July. We have filed the return, but we did not e-verify the return. So, and then we realize in the month of August that I have not done the e-verification. Then what will happen? I will have to refile the return as a belated return, and then I have to pay the penalty. Whatever penalty it may be, 1,000 or 5,000. So we have to make sure that we are filing before due date and we are e-verifying the same as soon as we can do it, but before 30 days, before 30 days of filing the return. Going ahead, preparation of ITR file. So I'll not take much of time in this, but I'll tell you the importance of preparation of ITR file. So whenever we are accumulating all the documents or all the expenditure or investment documents, we have to keep in mind that everything whatever we are filing in the income tax return, all that reference document should be there in a particular folder. If we are using our laptop, if we are storing the documents digitally, then it is advisable you keep that folder safe and secure. And if we are preparing a physical file, then it is all right. You can take the printout of all the documents, and then you can prepare the ITR. But why is this important? See, the department can open your ITR for maybe 4 years, 5 years, 8 years, whatever time they have set. They can open your ITR for assessment, and they can ask for documents. Like, say, for example, if they want to open the income tax return for 2016-17, they can do it right now, and they can ask you that this is the information you have provided in your ITR, and I want to see the document of all of this. Please bring your documents. Then you will not be having those documents handy. You have to search for all of that. You will not even remember from where have you picked up all that information, that amount of exemption what you have claimed. So you will not be aware about that. So when we have an ITR file, we will put all the income documents, all the expenditure documents, all the investment documents which is relevant for the ITR, so that tomorrow whenever the assessment is being done, I am ready with everything and I know from where I have picked up what figure. So this is very important. So what all documents should we keep in the ITR file? Point one, all the income related document. If you are a salaried employee, then put your form 16, put your form 26AS, and there is one more document called as AIS, which is annual information statement. You should put that as well. Where should I get this 26AS and AIS? So you can download the same from the income tax portal. So incometax.gov.in, you can log in there. You can download these two documents from income tax portal and keep in your ITR file. Apart from that, you should keep your bank statement, because in your bank also you get certain income like FD interest, dividend, savings bank interest, and any other income whatever we are receiving, it comes in our bank account. Then we should be keeping, like if we are selling a property, we should be keeping both sales and purchase deed, so that we can have a calculation of the capital gain. What is the taxable amount of capital gain? Or if there is any loss, we can carry it forward, but we have that information handy. Apart from that, whatever expenditure which is eligible for deduction, say for example, if you are paying rent, then HRA, your house rent allowance related document, which is rent agreement or a rent receipt. So these documents we should keep. Apart from that, if you are claiming any LTA exemption, then whatever bills we have submitted to the employer, the same bills will keep it in our ITR file. If we are investing in LIC, medical insurance policy, then all the premium payment receipts, we have to keep it in our ITR file. Apart from that, if we are doing share trading or if we are doing any FNO trading, then whatever broker statement what we get, capital gain statement, we should get that in our ITR file. If you are buying and selling shares, then you will be having contract notes, digital contract notes, you can download and save it. So why this is important? See, tomorrow if the assessing officer is asking you documents, you may be searching them, you may not find them also. You have left your organization, now you cannot get form 16. You have like some information here to in your 26 years may change. So you should be downloading one copy of 26 years and keeping it for your reference. Tomorrow, even if there is a change, you can tell the income tax officer, when I filed the return, this was the information available on the income tax department. So that if any question is asked, I can answer immediately. One more document is very important, is last year's ITR copy. So if you have filed your return last year, you should download that ITR form and along with the acknowledgement, and you should keep in your ITR file for this year. Why is this important? Say for example, if there was any loss, house property loss or business loss or capital gain loss, you can set off in this current year if it is eligible. So you should be taking the reference from that last year's ITR copy as well. So these are the documents which we should be preparing and keeping in our ITR file. Let us understand the different type of ITR forms which are applicable. So see, nowadays we are not required to know what ITR forms are required, because there are tools, there are softwares, even income tax department, they will only ask your income and then they will choose the ITR form accordingly. Same is being done at Cleartax. You just need to input your income details and the exact ITR form which should be filed will be selected for you. But we should be knowing what type of ITR is applicable, because the software may prepare the ITR form as per the information provided by you, but they will not ask specific informations if that is applicable to you or not. So say for example, we have 4 types of ITR forms which are applicable for individuals. There are other 3 forms which are not applicable to individual, like ITR 5 is for partnership and LLP, ITR 6 is for company, ITR 7 is for trust or NGOs. So these four ITRs are only applicable for individuals and HUFs. So we should be taking a look at each type of ITR form and then understanding whether when we are filing through a software, it is picking up right ITR or not. Okay. So ITR 1 will be starting with ITR 1. So any person having salary income or total income less than 50 lakhs, or if he has interest income or dividend income or income from only one house property or agriculture income less than 5,000. If any such conditions are applicable, I can simply go and file ITR 1. Okay, but if there is any addition to these conditions, like say for example my agriculture income is more than 5,000, I cannot file ITR 1, ITR 2 will be applicable. My total income crosses 50 lakhs, then ITR 1 is not applicable, ITR 2 is applicable, and I have two house property and so on. So then ITR 1 is not applicable, ITR 2 or 3 or any other ITR will be applicable. So those persons having income from salary, one house property, interest or dividend income, or agricultural income less than 5,000, you can go and file simply ITR 1. Now, if any other condition is applicable, then we have to see what other ITRs we have. Like say for example, if you are having salary income or total income less than 50 lakhs, still you are a director of a company, or you are having unlisted equity shares of a company, or maybe you are having ESOPs. In that case, you cannot file ITR 1. ITR 2 will be applicable to you because you have to declare or disclose this information whether you are a director in a company or a LLP and what unlisted shares you are holding. This option is not available in ITR 1. Similarly, if you are an NRI cannot file ITR 1. For NRI, ITR 2 is applicable. Or if you are a person having global income, like you are earning from other countries as well, then ITR 2 becomes applicable. Or if you have paid any taxes outside India, then ITR 2 will be applicable, because in ITR 1 you cannot claim the foreign taxes paid. You cannot claim the credit of that foreign taxes. If you have capital gain income beyond the salary and interest income, then ITR 2 becomes applicable because capital gain is not included in ITR 1. So this is all about ITR 2. So we should be aware that if we have any unlisted shares, if we are a director of a company, if we are having ESOPs, if we are having RSUs, then ITR 2 should be filled. If I have any foreign assets, if I have any foreign bank account, then ITR 2 has to be filled. I cannot fill ITR 1. Now, ITR 3. So I have filled everything in ITR 2, but then why ITR 3 becomes applicable? So ITR 3 is called as a master ITR because you can fill all types of information, all type of income, all type of exemption, which is applicable to the individual or HUF. So for those people for whom ITR 2 doesn't become applicable, they will have to file ITR 3. So what is that one particular condition? Is then if you have business or professional income, then no other ITR will be applicable to you. You simply have to file ITR 3. Okay, if you have income from business or profession, right? If you are a freelancer, if you are having any kind of business, then ITR 3 becomes applicable. In only in ITR 3 you have an option to prepare balance sheet, trading and profit and loss account. In no other ITR you can do that. And if tax audit is applicable to you, then only ITR 3 will be no, applicable to you, because in no other ITR you can fill the tax audit information. So ITR 3 is called as a master Fine now. Refresh करो. Okay, I think there was some technical glitch. We'll just begin again from where we have stopped. So we were talking that if you have missed to submit your proofs to the employer, then don't hesitate while claiming those exemptions and deductions while filing the ITR. You are eligible to claim such, and you can do it. Okay, but make sure that whatever deductions and exemptions we are claiming, we will put a copy of that in our ITR file. This is very, very important. Okay, apart from that, if we have made any donations, people have this doubt that whether I can claim 100% of that amount or 50% of that amount. So let us make it very clear that whenever you are making any donations, if we are making to a local charitable institute, or if we are making to a religious institute where we get the exemption, then only 50% will be applicable. Means whatever amount of donation you are making, only 50% of that you can claim. If you are making any donations to PM Cares or CM Relief Fund, Drought Fund, then 100% will be applicable. But still, before taking the claim, we have to be very sure under what category are we falling. Is it without an upper limit or with a qualifying limit? We have to be very sure. Otherwise, we may get a notice. And whatever documents we are referring to while putting the information in the income tax return, make sure that we are putting the correct amount in the ITR referring to the document. If we are having, if we want to claim more refund from the income tax department, we are unnecessarily putting the higher amount of exemptions and deductions. In that case, please be prepared that you may receive a notice from the department, because we have seen many cases who are getting notices. Departments are asking you the proof for the exemptions you have claimed. So make sure we are not doing this. As we have talked about the annual information statement, please refer to the annual information statement. It has those specified financial transaction information which might not be known to you. Like, say for example, if you have sold any mutual fund, okay, you have forgotten while filing the income tax return because it was long back, 10, 15, 5, 10 months before. But now AIS will be having that information, because the mutual fund who has done the sell transaction, they will report it to the income tax department on your behalf, that this is the amount of mutual fund you have sold. So this information will be available in your AIS, annual information statement. You can take a reference of the same and make sure we are putting it in as a capital gain or loss, whatever it is, but we put that information in the ITR. 26 years will only show the tax deducted on the income which is given to you. But AIS will have extended information about most of the income which you have received during the year. So if you have received any interest on fixed deposit where no tax has been deducted, AIS will have that information. If you have sold any property, if you have bought any property, or if you have sold any mutual fund shares, FNO transactions, all of these information will be available. Not FNO in particularly, but speculative transaction like intraday transactions, these will be available in your AIS. Okay, so in many cases we have seen that people were having losses in the previous years and they have carried forward, but they forgot that they actually had any loss, and now while filing the return they did not set off those losses. That is the reason I've told while preparing the ITR file, you should keep one copy of the previously filed ITR, which will help you to understand if you have any loss to be carried forward, you can do it in this year. And I think if you are not filing the return till the due date, till the original due date, which is 31st of July, you will not be eligible to carry forward the losses to the future years. So make sure we are filing it in the time. Okay, now let us quickly see how can we file the return using Cleartax ITR filing tool. So please make sure that we are taking the maximum benefit of this tool. Here you can simply file the ITR You can just register yourself with your PAN number and date of birth. You can take the OTP either from the income tax department or Aadhaar OTP, whatever is comfortable to you. Make sure that your PAN is linked with Aadhaar, otherwise filing will not be possible. So once we have done the registration, we have got the OTP, we can start filing the income tax return. So we can fill out the basic information like your name, father's name, date of birth, Aadhaar number, address, PIN code, and bank details is very important, because if we have any refund, we have to have a bank account where we can get the same, and the bank has to be validated. Okay, so this we can fill out. And then if we have form 16, then both part A and part B can be uploaded on the Cleartax income tax filing tool, and all the information will be taken directly. You will not have to fill anything manually. So manual effort will be reduced. You can simply drop your form 16 and you can file your return without any hassle. Now, after uploading the form 16, they will ask you to confirm whether these informations are correct. Okay, so in that case, we just verify that okay, our this is our employer. This is the category of employer. The TAN number is correct. The tax whatever is deducted, that is correct as per the form 16. Basic salary, HRA, whatever breakup we have for the salary, that is correct, and whatever allowances we are getting, whatever exemptions are mentioned, these all are correct. Now say for example, in form 16 there is no exemption given for HRA now, but it is applicable to me and I know that I can take the benefit. So you can do your own calculation. You can use the Cleartax HRA calculator to calculate the exempt amount of HRA, and you can put it here. But make sure we are keeping one copy of the rent agreement or rent receipt to support this information. Apart from that, we can check whether all the standard deduction, profession tax, whatever we have paid, has been properly reported in the salary income or not. So once that is completed, we can go to the next heads of income like house rent income, or if we have any interest or dividend income, then income from other sources. If you have sold any capital gain assets, any capital assets, then that has been properly filled in the capital gain income tab. So let us talk about the income from house property. We actually classify it in three types of property. One, it is a self-occupied, where we are staying or our family member is staying. The second type of property is rental, let out property or rental property. So which means that we have put it on rent. We are earning rental income from that. The third type of property is deemed let out property. So the income tax department allows you to have two self-occupied properties. If you are having more than two property, the third property, either it can be a let out property, or if not, you are still using for your own purpose, then you have to make it as a deemed let out property. You have to show a notional rent income from that property, and you have to pay taxes on that. So these are the three type of property you can put the information. Coming to the income from other sources, you can put your interest income, dividend income, agriculture income, and any other exempt income, whatever it is, we can put it here. Make sure if you had a income on interest on income tax refund, like in the previous year, if you have got any income tax refund, the department gives you interest on that. So that interest becomes taxable. It is your income. So you have to put that interest income here in the income from other sources. Apart from that, when we come to the deductions or other exemptions what we are eligible for, we can come to tax savings and we can see what all sections are applicable to us. Like if we have invested in provident fund, if we have invested in LIC, if we have invested in some other mutual fund which is tax exempted like equity linked savings scheme, if we have paid children's education fees and so on, so we can take the benefit of section 80C. The maximum limit is 1,50,000. For medical insurance premium, we can take the benefit of section 80D. So I think all this information will already be available in your form 16 if it is properly disclosed to your employer. Otherwise, you can manually enter all these fields as well. If we have any other deductions, whatever applicable to us, like 80DDB, 80DD, 80U, if we have taken any education loan, 80E, then we can put all this and any other deductions or more deductions wherever it is available. Apart from that, this section, taxes paid, this is very important to verify because you all know that every month from your salary, the tax gets deducted. Okay, so whatever total amount of tax has been deducted, it should come here. Otherwise, you may end up paying taxes. Okay, so make sure the TDS, the taxes paid, is properly filled. If you have paid any advance tax, you should mention it here because otherwise, at the end, when you go to file the return, it will show a tax liability due. Okay, so we should be very sure that all the taxes we have paid, all the TDS which has been deducted, is properly filled in this tax paid and TDS page. Then, if we have any self assessment tax or advance tax, we should be putting it here. Now, this is a very important segment called as other disclosures. As I have told, if you're a director of a company, or if you are an NRI, or if you have income more than 50 lakhs, or if you have foreign asset, foreign bank accounts, then for all these information, you have to disclose some separate information apart from whatever income you have earned. So this is a place where you have to disclose everything. Okay, so please make sure that if any such condition is applicable to you, we are clicking on one of these conditions applied to me and we put the information correctly. Then once we have populated all the fields, and then we see at the end of the tax summary tab, we have all the gross income accumulated and the taxable income after all deductions. Make sure that we have cross verified this. Then it comes the tax liability. What is the total amount of tax we have to pay? Then taxes paid. So it is like the TDS and the advanced taxes and self-assessment tax in total. Then it will tell you if you have a tax liability or a refund. So in this case, in this sample case, I have paid 1,50,000 of tax, but I had to pay only 1,14,000. So I will get a refund of 35,820. So this is very important. We check and verify this is all correct or not, but make sure that we are not unnecessarily claiming a refund. If we are eligible to claim a refund, we will claim. Otherwise, we will not claim unnecessary refund. Otherwise, the department will send you notice. They will ask you to update your return and pay the tax with penalty. So we should not be doing that. If it is genuine, we should claim it. Now here you see at the end there is a comparison that which regime has been chosen for you. Since I had all those exemptions and deductions, I'm saving more taxes under old tax regime compared to the new tax regime. So the tool has already picked up old tax regime, but still I can compare whether old tax regime is good, good for me, or the new tax regime. So this is where the comparison can be done, and you can take the appropriate decision. So I think we are at the end of the session, and now we have explained how we can file the ITR using the Cleartax tool, what all things we have to keep in mind, what all types of ITR we have, how to prepare the ITR file, and so on. So if you have any questions, any doubts, you can always reach to us at support@cleartax.in or inquiries@cleartax.in. Now, specifically for the partners, if you are buying the plan for do it yourself, like if you are self filing the return, then you can remove the existing coupon and you can choose the coupon from the right side, whatever coupon is best applicable to you. Or if you have like if you are filing through assisted plans, like if you are taking the service of a CA from Cleartax who can help you file the return, then you can purchase the plan from the partner page of your company, where you can get the maximum discounts, whichever is applicable to you. So please file the return before the due date, and happy tax filing. If you have any questions, we can pick up. So there is one question that what is the process for newly joined employees? I have joined in 15 June. So I think for you, you have started your employment career from this particular year. So you don't have to file the return for this year. If there is no income in the previous year, then you don't need to file the return. You can simply file the return from next year onwards, means from next July. So when do we file the return? We file the return by 31st of July, but it is for those income earned during the previous year, which is from 1st of April 2022 to 31st of March 2023. So if there is any income during this period, you can file the return. If you have no income, then you can file it next year. Okay, so we have one more question whether the loss in trading can be considered. So there are two types of actually businesses. One is normal business where the FNO, the derivative trading, all of this comes. It is a normal business. So the loss from normal business can be carried forward and it can be adjusted with capital gains if you have any loss. And there is one more type of business which is speculative business. So if we are doing any intraday transactions, okay, daily we are buying and selling the shares, it is called as intraday. So that is classified as a speculative business. So that particular business, whatever loss you have, it will be carried forward and it can only be adjusted with a speculative profit. Okay. So yes, we can carry forward, and if we are eligible to set off, we can set off. So to download 26AS, we can log into the income tax portal. If we have already registered on the income tax portal, we can log in there. We can go to your e-file and then we can go to search the view tax credit statement. So that is the 26AS for you tax credit statement. You can download from there. Alternatively, if you have logged in for your internet banking, in every bank you have the option to file the return or to go to income tax portal. If you can log in from there and you can again use the same option, you can download it from there. Okay, so this is a very common question. It is asked that if we are filing return, can we switch to old regime or switch to new regime? So see, like as I've already told you that we can only change the regimes while filing the ITR. So yes, you can do that. You cannot do it while you are in employment. Like in the very beginning of the year, you have informed that you are going to be opting for new tax regime. But say, for example, after 6 months, you cannot say the employer that I want to stick to the old tax regime because they have already done the computation as per the new tax regime. So only when you are filing the return, you can change the regime. You can opt to old or new, whatever is comfortable to you, and you can file with the same. But as I've told, persons who are having salary income, income from other sources, capital gains, or these type of income, they can switch the regime old to new every time, and they can take the benefit wherever they are saving taxes. But for those people who are having business or professional income, these people can only switch once and come back once. Like if you are opting for old tax regime, you can go to new tax regime only once. And then if you want for the next year or maybe after 2 3 years, you think that now I'm saving more tax in old tax regime, then you can only come back once. So for you guys, there is no to and fro movement. But for any other person, salaried employee or any other person having house property income or income from other sources or capital income, you can keep switching the regimes, whichever is saving you more taxes. All right. So where can I get the AIS? So again, you have to log into the income tax portal. There, under the services tab, so you will find few tabs on the very top of the page. like dashboard and e-file, then services. So under the services tab, you can find the annual information statement. You can download the AIS from there. So once you go to the AIS, it will take you to the new page. There you have to select for which financial year you are downloading. Please make sure that we are not confusing between the financial year and the assessment year. So financial year will be 22-23, assessment year is 23-24. Okay, so we have to choose the financial year and then we have to download the statement. Okay, so if we have income less than 5 lakhs, we should file the return. If there is any tax deducted, we can take the refund. Am I required to file the return or not if my income is below 5 lakhs? See, if your income is anything between 2.5 lakh to 5 lakh, you are actually not required to pay any tax, but you have to file the return because the department says that only those people who are having in total income less than 2.5 lakh, they are exempt from filing the tax returns. But once your income crosses 2.5 lakh, you have to file the return irrespective of whether any tax liability is there or not. So make sure we are filing the return. Also, there are certain other conditions that if you don't have any income, still you are depositing such and such amount in your savings or current account, you have to file the return. If your electricity bill is of such and such amount, you have to file the return. If your TDS tax deducted is of such and such amount, you have to file the return. Or if you are an NRI, so there are certain conditions, okay? But still, if your income crosses 2.5 lakh, anyhow, you have to file the return, which is mandatory. So see, so not all the SIPs are tax exempted because we can have a normal mutual fund for which we are paying in SIP mode. It is not tax exempted, but only if we are opting for equity linked savings scheme. So this is one type of taxable mutual fund. If you are investing in the SIP mode, that amount can be taken as exemption under Section 80C. And even if you are doing a lump sum investment in equity linked savings scheme, that can be taken as an exemption, otherwise not. So not all SIPs are tax exempted. All right, I think we are at the end of the session. We have taken all the questions. Apart from this, if we have any questions, if you have anything in our mind, we can drop the same at support@cleartax.in or inquiries at the rate cleartax.in. We can purchase the self-filing plan. If you know how to file the returns, you can purchase the self-filing plan as I've already informed you. You can choose the coupon from the right hand side. You should remove the auto-applied coupons. And if we are taking the assisted filing plan, where we need assistance of a chartered accountant, in that case, we can go through our partner page, and from there you can take the plans, whatever best suits you. So we can take the plan accordingly, and you can avail the maximum discounts, whatever is available. Thank you, everyone. We had a wonderful session. Thank you for your patience for listening. Have a good day.